Hi everyone, I'm Georgia May Laverias, and I will be discussing equity and bonds payable in a simple and easy way. So the part one of our discussion is we're going to focus with the equity. Now, understanding equity, let's begin with the definition. It says here equity is also known as the shareholders' equity. It represents the ownership interest of shareholders in a corporation after deducting all liabilities. Now remember, kapag may equity ka, may bahagi ka sa assets at kita ng kumpanya. At ang lahat ng utang ng kumpanya kapag nabayaran na, ang matitirang value ay para sa mga may-ari or again, we call it the equity. Now, as you can see guys, we have the formula to get the equity. It's very simple. That's the total assets less the liabilities. Now, to move forward, we have the main components of equity. We have number one, the share capital at par. It says contribution of shareholders based on the par values of shares. Now, ito again yung sinasabi na initial contribution ng mga shareholders based sa par value ng shares. Second is the additional paid-in capital or what we call APIC. These are the excess paid over the par value of shares. So it says here, ito yung sobra na binayad ng investors lampas sa par value. And lastly is the retained earnings are the profits accumulated but not distributed as dividends. And ito ay kita ng kumpanya na hindi ipapamigay bilang dividends kundi iniipon para sa future growth. Para mas maging simple ang ating discussion, let's try this example. How to get the equity. Now let's read this problem. ABC Corporation has total assets of 5 million pesos and total liabilities of 3 million pesos. As you can see, the solution is very simple. Equity is equal to the total assets, which is 5 million pesos, less the total liabilities, which is the 3 million pesos. And the total will be 2 million pesos, and that is the equity of ABC Corporation. Now to journalize the entries, of course, at the par value contribution, we have debit to cash, 2 million pesos, and credit to share capital, 2 million pesos. Now, after learning about the equity, let's now move on to the bonds payable. Let's begin with understanding bonds payable. The definition here is these are the long-term liabilities representing money borrowed from the investors with a promise to pay interest and repay principal at maturity. So it says here guys, ito ay paraan ng mga kumpanya para mangutang sa public at ang bonds ay certificate na nagsasabing magbabayad ang kumpanya ng principal at interes sa takdang panahon. Now, under the definitions, we have the key features. First is the face value or what we call the par value. Now, remember guys, par value ay ang original value niya na para bang tinatawag na official price nung na-issue ang bonds. Second is the coupon rate or we call it stated interest or interest rate. Ito yung porsyento ng interest na binabayaran ng bond issuer sa bondholder taon-taon based sa face value ng bonds. Third is what we call maturity. Ito ay ang haba ng panahon bago kailangang bayaran pabalik ng issuer ang principal amount ng bond, parang due date kung kailan matatapos ang utang. And lastly is the issue price, which is under par or premium or discount. Ito yung presyo kung magkano unang binenta o inoffer ang bond sa public nung nilabas siya. So I hope malinaw ang mga key features under the bonds payable. Now let's try this example. First is bonds at par. The problem here is XYZ Corporation issues 1,000 bonds at 1,000 peso par value with a 10% interest rate and payable annually. Now, to get the proceeds, we have the very basic formula. Remember, to get the proceeds, you just need to the issue price per bond. That is 1,000 bonds multiplied by 1,000 peso par value. And that's the total of 1 million pesos. Now, to journalize it, you need to debit cash 1 million pesos and credit to bonds payable 1 million pesos. Take note, guys, this is under issuance. Now, to get the annual interest payment, you just need to remember the formula. And the formula is interest is equal to proceeds multiplied by the coupon rate. And that is 1 million pesos multiplied by 10%. And that is 100,000 pesos. Now, of course, to journalize the entry, that is debit to interest expense 100,000 pesos, credit to cash 100,000 pesos. Now, don't forget guys, again, bonds at par. Ito ay nangyayari kapag ang bond ay naibenta sa exact na face value niya. Now, let's proceed to the example number 2. Now, this is under bonds at premium. Now, before we proceed to this problem number 2, let me just remind you na itong bonds at premium ay nangyayari kapag mas mataas ang selling price ng bond kaysa sa face value niya. Now let's read the problem. OPQ Corporation issues 1,000 bonds with a par value of 1,000 peso with 8% interest rate and issued at 10, or I should say 1,050 pesos. So take note again, the selling price bond ay mas mataas kaysa sa face value niya. Now, don't forget to get the proceeds. We have the numbers of bonds multiplied by the issue price per bond. So that is 1,000 bonds times 1,050 pesos issued per bond. Now, the total of proceeds is 1,050,000 pesos. Now, to get the bonds payable, we need the numbers of bonds multiplied to the par value, and that is the 1,000 pesos. So again, 1,000 bonds multiplied by 1,000 peso par value, and that is 1 million pesos. Lastly, to get the premium on bonds payable, we just need to follow this formula, proceeds less the bonds payable. So that is 1,050,000 pesos less the 1 million pesos. And the answer is, of course, 50,000 pesos. So again, the proceeds is 1,050,000, the bonds payable is 1 million, and the premium is 50,000 pesos. To journalize again the entries, let's start with debit cash 1,050,000 pesos, credit to bonds payable 1 million pesos, and credit to the premium on bonds payable. That's 50,000 pesos. Now, when a bond is sold at a premium, again, ibig sabihin the company receives more than the face value. Take note also that the extra amount or what we call premium is not an income. Hindi siya pwedeng i-recognize agad-agad na kita. Instead, it has to be spread out or what we call amortized over the life of the bond. Kaya separate ang premium amortization sa accounting treatment. Now, the last example here is under bonds at discount. Ito naman ay nangyayari kapag mas mababa ang selling price ng bond kaysa sa face value niya. Now, to make it clear, let's read this problem number 3. RST Corporation issues 1,000 bonds with a par value of 1,000 pesos with 8% interest and issued at 950 pesos. So take note, from 1,000 bonds per 1,000 par value, it is issued at 950 pesos. To get the proceeds, of course, we need the numbers of bonds multiplied by the issued rate. or I should say, the 950 pesos. So that is 1,000 bonds multiplied by 950 per bond, and that's the total of 950,000 pesos. Second, to get your bonds payable, you just need to multiply the 1,000 bonds to 1,000 par value, and that's the total of 1 million pesos. Don't forget also the discount. And the formula to get the discount is, of course, bonds payable less the proceeds. And that is 1 million pesos minus 950,000 pesos. And the amount will be 50,000 pesos. So again, to journalize this entry, you need to debit cash 950,000 pesos, debit to discount on bonds payable 50,000 pesos, and credit to bonds payable 1 million pesos. Again, kapag bond is sold at the discount, ibig sabihin, mas mababa sa face value ang nakuha ng company. And take note guys, yung discount, hindi siya expense agad. Ina-amortize siya para idagdag ang interest expense kada period and umabot sa face value ang bond pagdating ng maturity date. Now, before I forgot, the interest rate, which is the 8% for both discount and premium, all you need to do to get the cash interest each year is multiply the bonds to the par value and the interest rate. Now, in this example number two, let me try to explain. So we have 1,000 bonds multiplied by 1,000 par value multiplied again to the 8% interest rate. And that's a total of 80,000 pesos. And that is the same as this example number three. Same instruction. You just need to multiply the numbers of bonds to the par value and the interest rate. And again, the example is 1,000 bonds multiplied by 1,000 par value and multiplied it again to 8% interest rate. And the answer is the same, 80,000 pesos. Now, of course, we're not yet done, guys, because I prepared four different problems under equity, bonds at par, bonds at premium, and bonds at discount. You can pause this video, guys, if you want to try these four problems. Alright, if tapos ka na, let's check the answers together. Here are the solutions. For problem number 1 under equity, let's read the problem. DEF Corporation has assets 8,500,000 and liabilities of 6,200,000. Again, the givens are the assets and the liability. So we assumed that these are the total prices of assets and liabilities. Now, if you remember to compute the equity, we just need to follow the simple formula. That is equity is equal to total assets, let's just say T assets, minus the total liabilities. Now let's start with the total assets. That is 8,500,000 less 6,200,000 pesos. And that's a total of 2,300,000 pesos. So again, that's how you compute for the equity. Now let's try to journalize this transaction. First, that is debit to cash. Again, the amount is 2,300,000 pesos. And that's debit to share capital. Same amount, 2,300,000 pesos. I hope this one is clear for you guys. Now let's move on to the second problem, and that is under bonds at par. Now let me just read the problem again. LMN Corporation issues 500 bonds with a par value of 1,000 pesos with 12% annual interest rate and issued at par. So we need to compute for proceeds, annual interest rate, or I should say annual interest, and prepare for the journal entries at issuance and the first interest payment. Now, to get the proceeds, once again, we just need to multiply the numbers of bonds, that is 500, to, of course, the par value, and that is 1,000 pesos. So the total of proceeds is 500,000 pesos. Now, to get the annual interest rate, remember that is the bond or the numbers of bonds, which is 500 multiplied by the par value 1,000 pesos and multiplied it again to the interest rate, and that is 12%. So the total is 60,000 pesos. Now, to journalize these transactions, let's begin with the proceeds. That is debit to cash, 500,000 pesos, and that is credited to bonds payable, same amount, 500,000 pesos. Now take note, guys, this is at issuance. Now for the second part, this is at the first interest payment. Your journal entry is debit to interest expense. Again, that is total of 60,000 pesos. Credit to cash, same amount, 60,000 pesos. So again, those are the answers for the first and second part of your problems. Now let's proceed for the third problem, and this is under bonds at premium. Now let me read again this problem. OPQ Corporation issues 1,000 bonds with the par value of 1,000 pesos with the 8% annual interest. It is issued at 1,050 pesos per bond. So we need to compute for the proceeds, identify the bonds payable and premium, then record to journal entries. Now let's start to compute for the proceeds. Don't forget the formula. That is the total numbers of bonds, and again in this given, that is 1,000 multiplied by the issued per bond, and that is 1,050 pesos. And the answer is 1,050,000 pesos. Now to compute for the bonds payable, that is the numbers of bonds, 1,000 multiplied by the par value, which is 1,000 pesos. And that is 1 million pesos. Now to get also the premium, of course, we just need to subtract the proceeds, 1,050,000 pesos minus 1 million pesos. And that is 50,000 pesos. Now let's start with issuance or at issuance. Okay, so let's start again with cash. That is total of 1,050,000 pesos. Okay, that is credit to bonds payable, 1 million pesos, with of course the premium on bonds payable. And that is 50,000 pesos. Now, of course, for the annual interest payment, just to make it clear for you guys, to compute it again, you just need to follow the formula. So this is for annual interest payment. That is 1,000 bonds multiplied by the par value 1,000, multiply it again to the interest rate, which is the 8%. And that is 80,000 pesos. Now to journalize the annual interest payment, so that is debit to interest expense. Again, the price is 80,000 pesos. Credit to cash, same amount, 80,000 pesos. Okay? Now I guess we are now on the last part of our problem, which is under the bonds at discount. So let me just read again this problem. RST Corporation issues 1,000 bonds with a par value of 1,000 peso with 8% annual interest. And take note, guys, it is issued at 950 per bond. What we need to do is to identify the bond payable and discount, then record to journal entries. Now, in this part, I will also include the annual interest payment. So let's start with the proceeds. Of course, to compute it again, you just need the total numbers of your bonds, that is 1,000, multiplied by the issued price, and that is 950 pesos. So the total price is 950 pesos. Take note, this is your proceeds. Now to compute for the bonds payable, that is 1,000 bonds, multiply it again to the par value 1,000 pesos, and that is 1 million pesos. Now to get the discount, okay, all we need to do is to less 1 million less 950,000. And that's total of 50,000 pesos. So again, nilas lang natin si proceeds sa bonds payable to get the discount. Now let's move on to journalizing the entries. Of course, we're going to focus first with the issuance. So it's still the same. That is cash, 950,000 pesos. Debit to discount on bonds payable. And that is 50,000 pesos. With a total price, of course, of 1 million, which is that's your bonds payable. Okay, again, this is under issuance. Now, to compute for the annual interest payment, don't forget the formula. I will just put it down here. That is 1,000 bonds multiplied by the par value, multiplied it again to the interest rate, which is 8%. And that's 80,000 pesos. To journalize this transaction, you need to debit interest expense. Okay, I'm so sorry. This is not 60,000. It should be 80,000. Next is credit to cash. Again, same amount, 80,000 pesos. And that's it. So I hope you got all the correct answers, guys. And these are all the basic formulas. And that's it for today's discussion. Thank you for listening. I hope you were able to follow along and solve the problem confidently. Have a great day, future CPAs. Thank you.